Kevin O'Leary looks straight into the camera and tells you $5 latte is the reason you're not a millionaire. It sounds tough, it sounds smart, it sounds disciplined. And in 2026, it's dangerously wrong. Because let me tell you something brutal. If skipping coffee actually made people rich, every broke person would already be wealthy. But they're not. And you know why? Because poverty is not a spending problem. It's a strategy problem. You don't stay broke because you bought coffee. You stay broke because you have no idea where your money is supposed to go once you save it. Saving pennies in a high inflation, high asset price world is like trying to outrun a Ferrari on a bicycle. You can cut Netflix. You can skip Starbucks. You can eat instant noodles for a year. And you'll still be standing in the same place while asset owners lap you again and again. Here's the uncomfortable truth nobody on TV wants to say out loud. The gap between rich and poor in 2026 is not about discipline. It's about deployment. The wealthy don't win because they save harder. They win because they know where the first $100 goes. They know which assets compound, which traps drain time, which safe advice quietly keeps you poor. And if you're still broke right now, this is going to sting. It's not the latte. It's not your salary. It's not the economy. It's the fact that you've been trained to play defense in a game that only rewards offense. You were taught to save. They were taught to position. You were told to wait. They were taught to move early and aggressively. And here's what really makes people uncomfortable. In 2026, doing nothing is more expensive than making mistakes. Cash is bleeding. Wages are lagging. And the so-called safe path is mathematically designed to keep you average at best. So no, I'm not going to tell you to stop buying coffee. I'm going to tell you something far more valuable. I'm going to show you how the right strategy can turn your first $100 into leverage, not overnight fantasy nonsense, real positioning, real compounding, real asymmetric bets that actually make sense in this market. Because wealth isn't built by feeling disciplined. It's built by making the right move before everyone else realizes they're late. Kevin O'Leary is not lying to you, but he is speaking from a world you do not live in anymore. When a multimillionaire tells you to stop spending, he's talking from the top of the mountain, not from the bottom. At his level, capital preservation matters. At your level, capital growth is the only thing that matters. That difference changes everything. Here's the mistake most people never see. Celebrity advice sounds universal, but it's not. It's contextual, and when you apply rich person rules to a broke person reality, you don't get rich, you get stuck. Kevin can afford to obsess over expenses because his money is already working. His assets compound while he sleeps. Yours don't. So when you copy his don't spend mindset, all you're really doing is freezing yourself in place. This is where the danger starts. Don't spend sounds responsible, but psychologically it trains you to think small. It creates a scarcity mindset. Every decision becomes about fear. Fear of losing money, fear of making a mistake, fear of trying anything new. And fear is lethal in markets. Being cheap is not an investment strategy. Being careful is not a plan. And discipline without direction is just slow motion failure. Let's talk numbers, because this is where the illusion collapses. If you save $100 and put it in a jar, you feel safe. You feel in control. But inflation doesn't care about your feelings. By December 2026, that $100 buy is less, guaranteed. No debate. No opinion. So while you're congratulating yourself for not buying coffee, your money is quietly losing purchasing power. That is not winning. That is controlled decay. The rich don't win by hoarding cash. They win by multiplying it. They use money as a tool, not a trophy. They deploy it into assets, skills, leverage, and positioning. And here's the brutal truth. If saving alone made people wealthy, teachers, nurses, and factory workers would dominate the Forbes list. They don't. Because saving without deployment does nothing. The real cost of celebrity advice isn't the coffee you didn't buy. It's the opportunity you never took, the skill you didn't invest in, the asset you were too scared to touch. So when you hear don't spend, translate it correctly. It doesn't mean don't move. It means don't waste. And wasting money is very different from using it to escape the level you're stuck on. Let's say the quiet part out loud. Most people are not poor because they don't earn enough. They're poor because they think like consumers in a world that only rewards owners. The difference between the poor and the rich is not intelligence. It's not luck. It's not even hard work. It's how the first $100 is treated. A poor mindset looks at $100 and asks one question: what can I buy? A rich mindset looks at the same $100 and asks a complete different question: what can I build, buy, or position that pays me back? This is where everything splits. The Garib mindset spends $100 on shoes. They look good. They feel good. They impress people who don't matter. 2 years later, those shoes are worth $10, if that. Zero return. Pure consumption. The Amir mindset spends $100 on an asset. Maybe it's a skill. Maybe it's a tool. Maybe it's a small position in something that compounds. 2 years later, that same 100 has produced cash flow, leverage, or opportunity. Same money. Opposite outcome. And here's what hurts the most. Both people worked hard for that money. Both felt they deserved to enjoy it. But only one used it as a weapon instead of a reward. This is why most people stay stuck at the same income level for years. They wait. They wait for a raise. They wait for a bonus. They wait for enough money to finally start investing, learning, or taking risk. And waiting is the most expensive mistake you can make because markets don't care that you're not ready. And inflation doesn't pause until you feel confident. Opportunities don't sit around waiting for you to save $10,000. The idea that you need more money before you start is a mental trap. It feels responsible, but it's actually fear dressed up as logic. If you don't know how to turn $100 into 110, you will never know how to turn 10,000 into 11,000. Money does not magically make you smart. Strategy does. This is the part nobody teaches you. The rich don't start big. They start early. They use small amounts to learn positioning, timing, risk, and return. They treat the first $100 as tuition, not as something to protect forever. The poor treat money like glass. Handle it carefully. Don't touch it. Don't risk it. Don't let it move. The rich treat money like soldiers. They send it out to fight. Some don't come back. But the ones that do return with reinforcements. And here's the warning you need to hear clearly. The biggest mistake you're making right now is waiting for permission, waiting for confidence, waiting for the perfect moment. There is no perfect moment. There is only early and late. $100 is enough to start thinking differently, enough to stop being a consumer, enough to stop rehearsing poverty in your head. You don't need more money. You need a different relationship with the money you already have, because the moment you stop asking, what can I buy, and start asking, what can pay me back, is the moment the entire game changes. Start with a simple fact. Most people will never make their first real fortune because they're paralyzed at $100. They look at that $100 like it's meaningless, like it can't move the needle. They're wrong, dead wrong. $100 is the smallest weapon in your arsenal. It's not enough to retire on tomorrow, but it is enough to teach you how to fight, how to move, and how to scale. Here's the brutal truth. Money multiplies when you take action. It stagnates when you wait. Every dollar sitting idle is a soldier you didn't send into battle. So let's break down exactly how to deploy your first $100 in 2026. I'm not giving you motivational fluff. I'm giving you a plan that can work if executed ruthlessly and intelligently. The first principle is this. Never put all your money in one place. Even $100 can be diversified strategically. I'm going to divide it into 3 parts. The first $40 goes into index funds or ETFs. This is your safe base. Why? Because you need a foundation that compounds quietly without drama. Think VO, VTI, or any broad U.S. market fund. These are companies that dominate the economy, pay dividends, and are unlikely to disappear tomorrow. $40 isn't going to make you rich overnight. It isn't a magic bullet. It's insurance. It's the part of your portfolio that keeps your capital growing while you experiment with the other $60. And let me be clear, index funds are not the sexy part of investing. They don't make headlines. They don't make you a billionaire while you sleep. But they are the stable ground from which all other moves can launch. Next, we take $30 and deploy it aggressively into 2026 tech and AI. Yes, this is the high risk, high reward slice. Fractional shares are your friend here. You don't need to buy a whole share of Tesla, Nvidia, or Palantir. You can start small, learn the dynamics, and participate in the companies shaping the future. Why tech? Because the next decade is being defined by AI, automation, and next-gen software. The winners here are not just companies, they are platforms, ecosystems, and exponential ideas. This $30 is your training ground for asymmetric growth. It's where your money can actually accelerate rather than just sit and grow slowly. Now, here's where most advice completely misses the mark. People will say, put it all in stocks. Other people will say, buy Bitcoin, buy gold. They ignore the most profitable investment you can ever make in 2026 yourself. The final $30 goes into self-education. This is brutal but necessary. Buy a book, buy a specialized online course, buy a tool that teaches you a real skill. Because here's the reality nobody tells you. The best ROI in 2026 is your own skill. Think about it. $30 invested in learning how to trade, code, or bid. A business can return tenfold, hundredfold, or even more over the next decade. $30 invested in knowledge compounds faster than any passive investment because it can change the way you make decisions forever. Let me give you examples. Buy one book on AI investing. Read it, take notes, understand the mechanics. Then, when the next opportunity appears, a stock, a tool, or a startup, you already know how to evaluate it. Buy a subscription to a skill platform. Learn Excel for finance modeling. Learn Python for automation. Learn negotiation or marketing for entrepreneurship. These are small upfront costs that produce exponential returns over time. Now let's break down how this $100 blueprint works together. The $40 index fund is your anchor. It grows steadily, quietly, and safely. You don't have to stress over volatility. It's your guarantee that part of your capital is working even if everything else fails. The $30 in tech, AI, is your engine. It's where you're taking calculated risk. This is the money that can actually change your trajectory. It teaches you exposure, patience, and how to evaluate winners and losers before the mainstream does. Even if one stock fails, you learn lessons worth far more than $30. The $30 in education is your leverage. It turns knowledge into compounding capital. It teaches you to think, evaluate, and act. Skills can be redeployed endlessly, unlike stocks that plateau or crash. You are effectively turning $30 into years of strategic advantage over the average investor. And here's why this works better than any save your latte money advice. Because it teaches you the three pillars of 2026 wealth building: capital preservation, index funds; capital acceleration, tech AI exposure; capital multiplication, education, and skill building. You're not just hoarding money. You're learning to deploy it strategically. You're learning how to take calculated risks while mitigating downside. You're learning the mindset that separates the wealthy from the broke. Some people will scoff at $100. They'll say, it's not enough to matter. Those are the same people who never understand how compounding works. Think long term. Think in systems. That $100, if deployed correctly, teaches you timing, discipline, selection, and patience. Lessons that will scale to $1,000, $10,000, and beyond. Here's the harsh truth. If you wait for a perfect sum to start investing, you will never start. Markets don't pause. Opportunities don't wait. Your future competitors are deploying hundreds while you wait for thousands. And this blueprint is designed to force action now, not next month, not next year. Because $100 is all you need to start the mental shift from consumer to owner, from spectator to player, from surviving to growing. Remember, the rich don't wait for perfection. They start early, they start small, and they scale intelligently. Your first $100 is the test. The lessons you learn here will determine how the next $1,000 behaves and the next $10,000. So here's the final summary. $40 into index funds equal to safe base, compounding quietly. $30 into tech, AI equal to asymmetric growth, high learning value. $30 into self-education equal to skill compounding, the highest ROI in 2026. Follow this blueprint and you don't just move money. You move your mindset. You move your trajectory. You build the foundation to turn your first $100 into the seed of a fortune. Because the first $100 is never about money. It's about learning how to think like the rich, how to deploy capital, how to take calculated risks, how to scale smarter than everyone else. And if you get this right, the next $1,000, the next $10,000, and the next $100,000 will not feel intimidating. It will feel inevitable. Let's get brutally honest. While you're learning how to deploy your first $100, there are things you absolutely cannot touch in 2026. If you buy them, you're not investing, you're handing your money to someone else's wealth. The first thing to avoid, fast fashion and hype clothes. The brands, the drops, the limited editions, they make you feel rich for a weekend. But in 2 years, that $300 jacket is worth $30, maybe less. 90% of its value evaporates the moment you leave the store. You're paying for attention, not assets. Every dollar spent on hype clothing is a dollar that could have been deployed into an asset that compounds, grows, and fights for you. The second thing, new cars on debt. We all love a shiny car. We love the smell of leather and the envy it creates. But here's the math you need to hear. When you finance a new car, you're signing up for instant depreciation, interest, insurance, and maintenance. That $40,000 car isn't an asset. It's a liability disguised as status. It loses value the moment it leaves the lot, often 20 to 30% in the first year alone. Debt isn't leverage here, it's a trap. Every month you make that payment is money that could have been working for you instead of against you. And the third thing, get-rich-quick crypto schemes. Yes, the internet is full of meme coins, pump-and-dump tokens, and influencers promising 10 times in a week. These aren't investments. They're lotteries with zero utility, zero fundamentals, and zero guarantees. Every time you buy into hype without understanding, you're the one being played. The market doesn't owe you returns. It only delivers losses when you chase what looks easy. Here's the harsh reality tying all three together. These are all psychological traps. Fast fashion makes you feel rich. A new car makes you look rich. Meme coins make you hope rich. None of them make you wealthy. None of them teach compounding, strategy, or risk management. None of them put you closer to financial freedom. And in 2026, with inflation high, attention spans short, and asset prices inflated, falling for these traps is more costly than ever. You don't just lose money, you lose time, which is the most expensive currency you have. So here's your rule. Ask yourself before every purchase, does this grow me, pay me, or teach me? If the answer is no, you don't buy it. You don't even think about it, because the market will teach you one thing relentlessly. Every dollar spent wrong is a dollar that will never fight for you. And the most important lesson of 2026, protect your capital, deploy it wisely, avoid shiny distractions, fast fashion, new cars on debt, get rich quick crypto schemes, stay far away, or you're just funding someone else's fortune. 2026 is not going to reward comfort. It's not going to reward people who wait for permission. It's going to reward action, the smart, the disciplined, the strategic. Here's the truth nobody on TV will tell you. The billionaires preaching discipline and penny pinching forget what it's like to have nothing. They don't live in the world you live in. They don't face your limits. They don't start with $100, but you do. And that is your advantage, because starting with $100 forces clarity. It forces decision making. It forces action. You cannot hide behind excuses. When your capital is small, you must move smartly, fast, and intentionally. Every day you wait is opportunity lost. Every dollar left idle is a soldier you didn't send into battle. The difference between the rich and the broke isn't income. It's what they do with the money they already have. So here's your challenge. Make 2026 the year you stop dreaming and start deploying. Your first $100 is enough. Enough to learn. Enough to grow. Enough to build the foundation for everything that comes after. No more scrolling social media and thinking someone else's luck will rub off on you. No more listening to advice that worked for someone who started with millions. 2026 is going to be about you, your skill, and your capital working together. Here's what I want you to do. Take your first $100, divide it smartly. Invest it, learn from it, multiply it. Then engage with this moment. Comment start below if you are investing your first $100 this month. Do it publicly so you commit. And subscribe for the weekly 2026 wealth updates, because this is the year you stop being a spectator and start being a player. The challenge is simple. Start. Don't wait for perfect timing. Don't wait for approval. Start with $100 today and let the compounding begin. 2026 will not reward hesitation. It will reward action. Are you ready to take the first step? Comment start now, because wealth doesn't wait.